Hey everybody, it's Jeff, and in this video, I'm going to give you guys an objective market analysis for silver and gold. I'm going to focus in on the paper and physical markets, and I'm going to analyze them the same way I analyze the grain markets, which I trade full time every single day. And these are the key factors affecting the actual physical market and the paper market. And of course, most importantly for both is the physical market premiums. And then we dig into the hedge fund positions. These are the big speculators that can easily influence our markets and are extremely important to keep an eye on. I plan on putting this video out every single week to give you guys a snapshot of what's going on. So please make sure you hit that subscribe button so you can follow along every single Friday. And then I'm going to hit on the US dollar index, which is absolutely vital to both gold and silver. And I'm going to look at the gold and silver futures charts to kind of get a sense of, are they bullish or bearish? Jumping right into silver, I got the last 3 weeks here and I plan to continue building this over time here. Every single week, you'll see an update that looks just like this. And the key is using the same source to generate those cash prices. So I went to appmex.com. I pulled off their random year brilliant uncirculated American Silver Eagle 1 ounce. And I used their as low as price, which of course you would have to buy quite a few of them to get that and pay either cash or wire. But that's the barometer I'm going to use every single week just to kind of gauge the current premium. And as you can see from Friday, January 29th to this past Friday, February 12th, the silver spot price really has actually gone unchanged relative. It dipped a little bit, it's edged back up, and it's higher as I write this Sunday night. Whereas the APMEX Silver Eagle price went from $32 an ounce or a $5 premium all the way up to a $12 premium currently. And it's been a $12 premium for about a week now, and it's been fairly steady, which is extremely important because that's telling you when they made that initial massive jump from 5 to 12, the market absorbed it easily and continued to buy at that $12 premium. And lastly, look at the hedge fund column there. You could see from Friday, January 29th, they were long 43,000 contracts of silver futures. And now they're down to 37,000. And this is really interesting because I follow commodities daily. I trade them full-time daily. And rarely do you see futures prices edge higher as the funds are selling. And that's what we're seeing it now. And if anything, that is an impressively strong bullish signal that futures can actually trend sideways to higher as funds are liquidating their position. That tells me how strong the actual cash physical market is. And then you jump to the actual chart to support that, and you could see at its most basic way to look at these charts, are they achieving higher lows and higher highs, which we are seeing that, especially since about mid or late November to early December. We've been trending. We had that spike about $30 on the whole Wall Street bets story, but I think silver has remained resilient and is still trending higher back up to that $30 mark. In my opinion, this chart is very bullish in how it's forming higher lows and working on higher highs. And then you look at the US dollar index. And again, as I mentioned, this is extremely important. It's an indicator for all commodities, but especially metals. As this chart goes down, the dollar gets weaker and commodities go up. And as you can see, the trend is definitively lower in this chart. We have lower highs and lower lows. And it feels like this most recent little rally since the start of 2021 has hit a relative peak and is trending back down into new lows. So kind of how do you boil that up? The key factors for silver, well, the physical market is clearly bullish. The hedge fund positions I kind of consider neutral right now, simply because for whatever reason, they're still liquidating their long position. Maybe they're taking advantage of this market and selling at profitable levels for them. But normally they would be buying when the market's still bullish. They just aren't doing that. So I kind of consider their position neutral at the moment. And then the US dollar index and the charts are both bullish. So in my opinion, the market is still firmly in an uptrend for silver. Looking at gold week over week, in this example, I'm using APMEX.com, of course, again. I'm using the random year 1 ounce BU American Gold Eagle, and of course the as low as price. And you can see the as of date for the last 3 weeks. Gold spot from January 29th was $1,847 an ounce, dipped down to 1810, and on this past Friday was 1825. So kind of chopping around a range there. Whereas the Gold Eagle is effectively climbed from 1967 up to 1985, which represents an impressive jump in premium from 120 an ounce up to 160, which of course this kind of mirrors the silver jump. Not as dramatic of a one-day change, but this has been steadily climbing higher. Of course, we all know gold made the original push higher early in 2020, breaching that $2,000 an ounce mark really early in 2020, and ever since then has been kind of chopping around, which I'll show you on the chart here in a second. And then you look at the hedge fund position. They got quite long early this year, and ever since that peak of around $2,000 an ounce, they've been slowly liquidating their position, not rushing to the door to get out. But you could see they've edged down from about 2 weeks ago from 96,000 contracts long down to about 87,000 contracts long, which produces a chart that looks like this. And as a commodity trader, I do not get excited for this chart. Honestly, it's kind of ugly. Kind of just in a slow, steady downtrend, seemingly lower lows and a bit of a lower high. If anything, I consider this chart very neutral at the moment, especially with the physical market premiums growing. I do believe there's still a general lack of gold available, but when it comes to the gold futures market, the paper market, prices just don't seem to want to move anywhere. It seems like the action and the activity is definitely in the silver market, which kind of leaves us with the key factors for gold. The physical market is still very bullish. The hedge fund position I consider neutral to even slightly bearish. And the dollar index, of course, is bullish, and then the charts are neutral. So I'm less excited about gold. I still think it's generally a buy in the futures market. The physical market, I struggle a little bit. I think the best play of all is still silver paper, but the physical market in silver is incredibly strong. If you can get silver for anything less than that $12 an ounce premium, I think you should do it. So that's all I have for this week. Again, make sure you subscribe so you'll check in every single week. I'm going to put these videos out. That's all I have. Thanks very much.